Welcome back traders to the Options Trader Lounge, and in today's video we have a great video prepared for you today. This is your weekend lesson, a concept that I think many of you would be very interested in, and I think that many of you who are new to trading would find this very useful. Now, if you haven't already, please go ahead and subscribe to the channel. Go ahead and like this video down below. And if you know anybody that would be interested in this topic and would find this topic useful to them in their trading, please go ahead and share this video. We would greatly appreciate it. Now, without further ado, let's get right into it. Welcome to the Options Trader Lounge, where we talk about generating income and growing your wealth with the US stock market using options. Thank you all for tuning in. Get yourself a drink, sit back, and relax. Now let's get right into it. As we know, this past week has been very volatile. This is August 6, 2023, and what I want to talk about today is finding consistency in the volatile market. Now, that can be very difficult for many of you who are brand new to the market, especially if you just started investing or trading in the market the past 3 months. All you've seen was the up market, and you have not seen a bear market or experienced trading in one, as we have seen back in 2022. Now, finding consistency in a down market may be very difficult to navigate, which is why it is important to find and really practice a strategy. That way you can be better prepared for the next trading session. So what I want to discuss today, as we can see, is the S&P 500 has been down 2.3%. If we look at the triple Qs, that is down -3%. Now, I'm not going to go into details of like the chartings of this, but what I want to discuss is that if we experience another down week because we had a down Friday, we are more than likely going to have a down Monday. And so Monday's, this upcoming trading session, may be very volatile, which is why I think it's very important for you to be prepared. Now, how to stay consistent in a volatile market? Well, I think it's important that we go over this topic, especially if you're new to trading. So, why do many of us fail when it comes to trading? And the whole idea of failure is because you are taking the wrong approach. You see, focus is a important factor when it comes to trading, especially if you are brand new. Focus on a strategy, to be more specific, is very, very important. And the reason why people fail is because of the handyman fallacy. You see, the handyman fallacy is where you have a handyman who tries to earn a paycheck by doing many different things. This approach does not work if you are really trying to be very good at what you do. I don't know about you, but if you've ever dealt with a handyman, I know I have with our properties that we have here in Las Vegas. Um, I made the mistake of hiring a handyman that did the painting and or that did our flooring here in Las Vegas on one of our properties, and we asked him if he could also paint. And that was a big mistake because uh, they were not good at what they did. To be quite honest, they were not good at what they did because their their focus and skill was not specific to the task that I was asking them to do. So the handyman fallacy is an individual who tries to earn a paycheck by doing anything and everything possible. A handyman would be wanting to fix a hole in the roof that could fix a flooring or even take care of someone's lawn. You know, there's too much spread apart tasks that one person can handle, which is why many traders fail at trading because they try to trade 5 different strategies. When one strategy doesn't work well, they're trying to do another one. And the whole idea of a failing trader is because they are not skilled on one particular strategy. As a trader, you generally start off with a smaller account, and if you are failing across 5 different strategies, you're not understanding the risk that is involved on each type of strategy that you deploy. Every strategy has its own probabilities. Some could be greater, some could be less, And it is important that you understand this concept up front, because if you don't, you're going to be failing more often than not. The reason why it's important to focus on one strategy and do it well is because you'll learn with the amount of capital that you have, the risk that is needed, the position sizing that you have to deploy that is needed to be able to keep your account alive. And you'll understand what market environments work well with your strategy. And that is where most people fail. You know, by having too many strategies at once and not being able to focus on one. And because you have many losses, you're beating yourself up psychologically and thinking that you cannot succeed in trading. Having focus in trading, it comes with many benefits. You can stay consistent, you can understand your risk parameters, and when you have your wins, you're at that point you're just playing the odds. Every strategy has its win rate, it also has its loss rates, and if you can string across more wins than losses, then you can be remain profitable and you can be confident at what you do. And so it is important as traders to specialize before you generalize. You want to focus on one strategy up front first before you try five different strategies. If you can get good at one and build your confidence and build your account size so that way it could handle a new strategy, then by all means go ahead and test out this new strategy. But as a beginning trader, or if you're a veteran trader, and in fact, many veteran traders who has found success, you'll realize that they're only really sticking to one or two strategies, and that's it. That they do the same strategy over and over and over again, and they just don't get phased whenever they take a loss because they understand the strategy, they understand their profit targets, they understand their losses, they understand their position sizing, and they just go with the flow. The market is a machine, and it could be random. It could collapse at moment's notice. And your goal as a trader is to understand that your strategy has its weakness. It also has its strengths. And whenever the market environment doesn't fit your strategy, they're usually just most successful traders are usually just hands off and just letting the market play out until the next opportunity arises in front of their eyes. So the it is important as traders to take the long-term approach and stay focused on one strategy and master it. These 2 points here that I have in front of you is the key to trading successfully. Trading has to be long term. You have to have a long term view. So if you're starting off with a small account size, maybe it's taking one or two trades and building that consistency, you know, and waiting and really just waiting for the opportunity to present itself whenever you have the right signal, and whenever you get that signal, that is when you are taking a trade, and to stay focused on one strategy and to never deviate from that strategy, right? Because again, as we know, any strategy that you deploy, if you just look back in history, it is going to have its win rates and it's going to have its loss rates. And if you can understand that concept, you can wait for the opportunity to present itself and you take the trade, you let it play out, and you let the probabilities of that trade work in its favor, and that is all that you do. You manage your position once you enter. Once once you enter the trade, all you're doing is waiting for the target profit to hit or your stop losses to hit. And if it cancels you out on a loss, then you're just waiting. You're waiting for the next opportunity to present itself, and you're placing the next trade again on the same strategy. And so the concept of focus, right? I want to talk about the concept of focus and relate it to the outside world of trading. You know, the best people who are professionals, who are specialists. One of those would be Kobe Bryant, a basketball player. Any professional basketball player understands that they aren't playing golf. They're not, you know, they're not doing any outside uh, extracurricular activities that, or like skydiving. They're really just focusing on the skill that needs to be done, so that way they could have the output that they want. As traders, or in this case, a basketball player, if you want to be a professional basketball player, you are literally training non-stop. Your mind, your focus, your the way you set up your daily schedule of how you wake up in the morning, and the activities that you do throughout the day is all around being good at basketball. In this case, if you're trying to be a basketball player, you know, you have to have that laser focus at being good at one particular task. And as we know, trading can be very difficult. The loss rate in traders is enormous, but you can find consistency in trading if you stay focused at one strategy. Because we the whole idea, right, is to stay focused and really be good at what you do. Any profession is focused at one particular skill. In this case, it would be basketball. Uh, Another example would be a brain surgeon. Brain surgeon, they are not on their downtimes. They are not delivering babies at the NICU department, or they're not operating on people's knees. As a brain surgeon, if they're not in the operating room, they're in their offices learning about the brain, learning about different research topics that has came about brain, brain, brain functions. You know, they're studying when they're not operating, and it's all around the human brain. They're practicing their skills, they're understanding the tools that they have, they're understanding different medical devices that are meant to help, with their operations and performing a brain surgery. So you can see how focus is very important when it comes to a profession like brain surgery. Now, what makes you think that focus in trading is less important? You know, Focus in trading is very important. And one way to do that is to be focused on one strategy. The market is always going to be there. Taking losses is going to happen no matter what, right? The point that keeps you in trading and that keeps you successful is to be able to minimize your risk, so that way you can have the opportunity to find the next signal that fits your strategy. Now, if we want to look at the world of investing, we can see that the most richest man in the world, Warren Buffett, understands the concept of focus. He only focused on building wealth around investing. Investing and trading goes hand in hand, uh, and Warren's strategy towards investing was really to buy value companies that people didn't see value at first, but understood that you know companies that had good cash flows, that has a good balance sheets, that has a good outlook on their business concepts, are proven to be successful. And as you can see, by Warren Buffett's age in terms of net worth, he accumulated majority of his wealth the past within the past decade. You know, at 92, he's worth 109 billion. So what does this chart tell you here? Well, it tells you that if you focus on one strategy and stay consistent at it, laser focused at it, and you multiply it by time, you will have the output that it's going to give you. You know, Investing, just like trading, if you apply this formula here, strategy plus consistency over time, you will have a profitable outlook, right? Now, strategy also means that you're taking the losses and you're playing the probabilities, because any strategy has its losses. It also has its win rate, right? So it's a matter of being consistent at your strategy over a long period of time. you will be able to achieve the output that you want. So if you understand this concept and if you find this video valuable, please go ahead and like this video down below. Go ahead and subscribe to the channel. That way you're not missing out any of our videos, and we will see you on the next one.